Good evening, everyone. Welcome to the webinar, and hopefully you can see my screen as well as hear me okay. If there's any issues, just send me a message or just type it into the question box. In this webinar, we're primarily going to talk about the WeeklyMAX product as well as weekly options in general. Weekly options have become very, very popular, and we'll take a look at how popular they've become. But they have some very significant pros as opposed to the old way of trading, which is the monthly option series. However, with those pros, there's always cons, and there are things that you have to watch for. Um, because if you don't understand all the dynamics of how weekly options behave 1 week prior to expiry or even 2 weeks prior to expiry, then you're not going to be able to take advantage of them, first of all, and perhaps you'll even take a fairly big loss because that's just the nature of weekly options. So we'll look at all of that in this webinar. There's definitely, I believe, there's more pluses than minuses, but knowing what the minuses are will keep you out of trouble because you know what to look for. Because things happen quickly in the weekly options. When you're 1 week or 2 weeks away from expiry, the entire dynamics of these options changes. So we'll be looking at that in particular. My name is Hari Swaminathan. If for those of you who don't know me, I'm an option trader myself. I've been an option trader for about 8 or 9 years now. I started learning options on my own. I did a couple of programs with the help of a couple of programs and some trading services and all of that. But primarily, I've been self-taught in options. I really got into it about 6 or 7 years ago, but it was very frustrating in the beginning because every time you try something new, you learn something. However, that came at a cost, and the cost was, you would take a loss, you would learn something. However, you kept on making some mistakes or the other. So in options, there are a lot of moving parts, and even if you ignore or if you're unaware of what all those moving parts are, you will lose initially. And so it actually was very frustrating for me, and that's when I decided to really get into everything deep, and also focus on specific approaches to the options market. In the options market, we always deal with the market maker. So, it's not like the stock market where it's a peer to peer platform. Here, always the person on the other side of our trade is always a market maker. So, I mean, these guys are professionals. They are obviously expert options traders, and they're professionals. And to make matters worse, they have flexibility in changing the volatility, in changing the bid ask spread, and changing the prices of the options themselves. So, they obviously have an edge, and to bring that edge back to our side is a pretty serious affair. It's not simple. So. If you're feeling frustrated, if you're in the beginning of options trading, if you're in the first year or maybe even in the second year, I want to tell you that it's normal that every time you make a mistake, you will learn something. However, it comes at a cost. So that's why I always say to focus on understanding these instruments, because they are unlike any other instruments in the market. There's nothing like options. In fact, every other instrument in the market is one dimensional, which is the price. If the price goes up, you make money. If it goes down, you lose money, or the other, vice versa, if you're shorting it. But it's a one dimensional game. Whereas in options, there are many, many dimensions. We all obviously know about time decay. We know about implied volatility. We know about the Greeks. We know about delta and gamma. Then what happens, due to all of these parameters, when you're 3 months out from expiry, what happens to them when you're 1 month out, and finally, of course, which is the topic of this webinar, is how do these options behave when they are inside the 15-day period. And it's very, very different. These options completely take up a new character altogether when they enter the final 15 days. And that's critical for weekly options. So let's jump right in and talk about weekly options. Weekly options first started about 4 to 5 years ago, and not many people really knew about them. Obviously, the professionals knew it and all of that. And slowly, the trading public also came to know, and it's really picked up steam in the last 2 or 3 years. And it's picked up steam is understating that fact. I mean, there is now massive volumes and open interest on weeklies. There are weeklies on over 100, maybe even 150 or 200 stocks and ETFs. Then more recently, they started something called the shorties. The shorties is not an official name; it's a slang term. And shorties are weekly options that expire in 2 weeks and 3 weeks before the monthly. So, you'll have 2 or 3 weekly series, and then you have the monthly, and then you'll have another 2 or 3 weekly series, and then you'll have the monthly. So these shorties actually provide a lot of flexibility when it comes to trading weekly options, because now you can structure strategies. Of course, you could always structure it for the monthly series. Then you could structure it for the weeklies. But the problem with the 7-day weekly is that there is not a lot of time, and the Greeks just go berserk during the final 7 days. A much more balanced set of series is the weeklies that come right after it. So which has about 15 days to expiry, and those are the shorties. And so there are shorties on about 50 stocks and ETFs. There's, of course, they keep adding shorties to all the stocks that have a good liquidity in the market. And so we're obviously going to see more and more stocks and ETFs have shorties. But I found that the shorties really give you the flexibility when it comes to weekly options, especially when you combine the front week and then the back week. The back week is the week right after the front week, which has about 15 days to expiry. One of the things that we've started noticing, and even it's really noticeable on the big indices, is the bid ask spread, for example, on the SPX, sometimes on the SPX monthly series, that is, sometimes it can be over, $1 and no, $1.50. That is just the bid ask spread, $1 to $1.50. So, that's massive. And, when you take a trade on those monthlies, you're putting yourself at a pretty big disadvantage, because at the very least, it has to move half of that distance, 50 cents, for you to sort of, come back, bring the edge, at least make the edge as 50-50 between you and the market maker. So, you're climbing an uphill battle. Now, granted, we are always climbing an uphill battle when we trade options, because we cannot get away from the bid-ask spread. There is always going to be a bid-ask spread. But the question is, how much? If you've looked at Apple options, the bid-ask spread is 1 cent. If you looked at the Spider options, the ETF, the bid-ask spread is 1 cent. So, it cannot get better than that. So that, obviously on the SPX options, it doesn't come to 1 cent, but we've seen it come down to even 20 cents and 30 cents. And that's a big difference between the monthlies, where you have $1 or more, and now you have the bid ask spread as 20 cents and 30 cents. So basically, the edge to the market maker is only about 10 or 15 cents, which is, very, very decent for a large index like the SPX or the Russell. So that's the great advantage of these weeklies, because they're seeing so much volume and so much open interest. It's becoming more and more competitive for the market makers to put a wide bid-ask spread, and we're getting some very, very good bid-ask spreads even on the large indices. The stocks, of course, we are seeing all kinds of volume, and now one of the big advantages of weekly options is that we have the ability to create what we call weekly income. Previously, in fact, most options trading strategies involve a monthly income strategy, and that's fine. Monthly income is fine. There's nothing wrong with monthly income, but there are some specific disadvantages with monthly income, because you have to wait for almost a whole month for the trade to play out, and a month these days is a long time, and adverse moves can happen. Some geopolitical event can happen, and it tends to disrupt a monthly trade. Now, granted, those events will also disrupt a weekly trade. However, you have the ability to create a weekly sort of income. So, even if you do like 3%, 4% on a weekly basis, and one week you take a hit and you lose 5%, it's okay, because you have the ability to create a weekly income, and it's much more easier to overcome one week where you have a loss. However, the caveat is you have to approach weekly options in a smart way. You have to approach it with the knowledge that goes along with weekly options, because if you don't, then you're taking too much risk, and one bad trade can potentially wreak havoc on your portfolio. However, if you approach it properly, then I think you can restrict a bad week to a certain amount and just move on. And all you need is another good week to make it up. So that's the basic philosophy, the history of weekly options. Let's take a look at the volumes, and these are the SPX weekly volumes that the CBOE has recorded. And as you can see, it starts from June 2010. We had perhaps, I would say, about 10,000. Average daily volume is about 10,000 contracts on the SPX weeklies. It has steadily climbed up from there, and today it is, almost average daily volume is like 250,000 contracts, 300,000. 250 seems to be the minimum over the last 6 months. This is, of course, from March 14. March 14, then this would be June, and this would be September. So it's actually fairly extensive. So weekly, and this is just climbing. And then on the right side of the graph, the on the y-axis, what we are looking at is the percentage of volume traded in the weeklies as compared to the overall SPX volume. So basically, what we are saying is now we are almost hitting 35% of all SPX volume is now happening in the weeklies. And this is, of course, climbing. So a year from now, I would not be surprised at all if this number is over 50%. And that's the way these weeklies are climbing. And, 4 years before, 95% of all volume was the monthlies. But as you can see, this has become very, very popular. There's, of course, there's minuses, but obviously I feel there are more pluses, because if you once you study the characteristics of weekly options, you'll understand what the pluses are. But what is more important to understand is what the minuses are, because that's where traders can get into trouble. So that's what we are going to look at. So let me give you an overview of what the WeeklyMAX product is all about. So in this product, you're going to get a complete overview of what the weekly options are and what the shorties are, and what are the characteristics of these options. Obviously, when options enter the final 15 days, you're going to see a dramatic change in the behavior of all the four Greeks. And it's very, very critical to understand these, because this is this is really the key to the whole thing. How does delta behave? How does gamma behave? How does theta behave? And how does vega behave? These are extremely important to understand, because many times, if you don't understand these, you'll see that your options are behaving in a certain way, and you're not able to understand why that is the case. So if you come in with the knowledge of what to expect, then the behavior itself will start making a little sense. And of course, it's always good to paper trade these things before you get proficient for a month or two, whatever your timeline is. But it's important to understand how these Greeks behave. So if you've taken a trade, always look at it, and look at how the Greeks are changing, and look at how the price is moving. Why is it moving so fast? If it comes closer to the money, two of the Greeks are going to go crazy, and so on and so forth. So it's important to understand the nature of the behavior of all the four Greeks. So of course we take a detailed study of all four Greeks, and we analyze the behavior in the final 15 days, in the final 7 days. Then, what types of trades are good for weeklies? You know, and we say what types of trades are good for weeklies, meaning you always have to consider the rewards in terms of what is the risk on the trade. So you can trade credit spreads, you can trade iron condors, you can do all these trades, but yeah, what are the negatives? What are the risks involved in these trades, and how do you deal with them? What are the time frames you choose? Is it good to get in when there is 7 days left to expiry? Is it good to get in when there is 5 days? Or is it good to get in when there is 10 days or 12 days or 15 days? And so these will vary for the type of strategy that you're using for weeklies. And so that's the first consideration, is to understand, okay, which strategies perform better in which time frames. There are some strategies that will perform better in the shorter time frame, so meaning like 4 days, 5 days. And then there are some strategies that will perform better at the higher end of the weekly. So when we talk of weeklies, we're not strictly talking of the 7 day options. In my opinion, the behavior of weeklies start changing when there are 15 days, approximately 15 days to expiry. So anywhere from 13 to 17 is fine. That would be the upper range of weekly options. And then the lower range, obviously, you can come down all the way down to 1 day and 0 days. But basically, I think any trade you put, I would not advise to put it on the final day unless it's a very speculative trade. The options are cheap, and if you want to buy some out of the money calls or out of the money puts and hope for a big move in that stock that very day, that's fine. Yeah, but you have to understand it's a speculative trade. If the move doesn't happen, you're probably going to lose your money, because there's just no way to adjust that option except to close it. So, but that's okay. That we're talking more of a speculative trade. But if you approach these strategies, with some kind of a structure, with some kind of a trading approach, then you can structure trades anywhere from 4 days to about 15, 16 days. And once you pick the right time frame for the right trade, you need to pick the right options, the strike prices, what are the considerations for that, what delta do you go to, and all of that stuff. So when we talk of the weekly options, the WeeklyMAX product, all of this goes into considering what is the best time frame, what is the best strike price, which are the right options at what deltas. So all of these are discussed for the various strategies that we can put. Now, one of the big advantages of weekly options is the weekend time decay that happens. So depending on how far back you go, so let's say if you have 15 days to expiry, then you're looking at 2 weekends almost, in those trades. So what is the best way to take advantage of weekend decay? Because that's a very critical thing. Weekend decay is very important. There is quite a bit of weekend decay that happens. In fact, I would say in the second weekend, so which means when you have about 14, 15 days left, in the second weekend, you're going to see almost 15 to 20% of time decay happen in that weekend. And then in the weekend that is just prior to expiry, a good 30% might come out there. But how do what is the best way to take advantage of weekend decay? If you buy the options too soon, then you're going to see theta decay. Well, if you're buying options, then then theta decay is against you. But if you're selling options, then you want to take advantage of weekend decay. And so, how do we do that? What are the best times to do that? How do the market makers look at this whole weekend theta decay approach? So, all of these are looked at in detail in the product. So, basically, we'll consider all the factors that go into each trade. And of course, no options trade is complete without knowing how to do the risk management and adjustments if things go wrong. Because you'll see that, 1 out of 2 or 1 out of 3 times, things won't work out your way. So how do we keep our losses in control? And what is the best way to adjust some of these trades? And of course, there are always low risk, high reward trades with weekly options because the cost of these options are very low. So you can, like we said, it's a speculative trade. However, if you combine the speculative trade by buying a long call or long put, if you combine it with some kind of a signaling system. So on Option Tiger we have swing trade max, but whatever signal, whatever chart based, technical based patterns that you look at, if there is a way to combine that with some speculative trades, these are low risk, high reward trades. So we also cover that in the product. Now let's talk about the risks and rewards of weekly options in general. So we touched upon this a little bit, but let's look at the details of what these weekly options does for us. So one of the things I said was that now we have the ability to create a weekly income plan. So this is very good, in fact, because the goal, if you want to be consistent, then if you can perform, let's say you can perform at 3 to 4% a week on average, 3 to 4% a week, then on a monthly basis, that comes to 12, 14, 15%, which is very, very good. Obviously, it's a very high return. And if it goes against you, then you need to put the risk management tactics into place and make sure you don't lose more than 3 to 4, because you can't afford to lose 20% when you're making only 3 to 4% a week. You can't afford to lose 20, 25% in one trade. So you want to keep those risk management techniques in mind. However, as an overall strategy, it's much more manageable and it's much more desirable to create a weekly income plan rather than the monthly income plan. So you have the advantage of that is it's a much shorter time frame for the trade to play out in your favor. So even if you go and say you put a credit spread at a 10 delta, then you have much shorter time frame. And shorter time frames necessarily means that the time decay is rampant at that time. So any trades that are time decay based are going to see some rampant time decay. Which is very advantageous to us if we have time decay strategies. And a lot of weekly option strategies will be time decay strategies because that is one of the biggest or most impactful characteristic of weekly options. The option price really starts decaying in the final 7 days to 15 days period. So that's an advantage. We can take advantage of that. Then, as I mentioned, there is the front week and the back week. So we're talking about the weeklies and we're talking about the shorties. There are very flexible ways of combining the front week and the back week together in your trading strategies. And this is very advantageous because, excuse me, because you can also look at weekly options and creating a weekly income plan by it doesn't necessarily mean that you have to tackle the front week. So what I'm saying is day 0 to day 7, here the options are going to move really fast. And sometimes that's good if it's moving in your favor, but when it's not moving in your favor, it can be pretty bad. And so I found that using the front week and using the back week, which is day, let's say day 8 to day 15, that is really a very flexible way of dealing with weekly options. So, this whole aspect of weekly options are also covered, in the product. Now, there are some minuses, obviously. With options, there's no free lunch. All positives come with minuses. Minuses are the moves can happen very quickly. If you're short gamma, which means you have a credit spread or an iron condor, you're basically it's a time decay strategy. If you're short gamma, that means you have a time decay strategy, and short gamma trades can be badly exposed if there is a huge move against you. So that is something we have to watch for. While we can all appreciate the positives of rampant time decay, time decay unfortunately comes with this short gamma feature. So those two go together. You cannot avoid it. So whenever you have a time decay strategies, you have to be prepared in terms of your risk management and in terms of your trade management strategies. So those things are also covered in this. And of course, in general, because of this nature, because of this feature, where the short gamma tends to snowball when the trade is going against you, you obviously need a slightly more active approach when you're dealing with the weekly options. And that's another reason why I prefer the shorties, because the shorties don't move that quickly as the front week. The front week really can be pretty intense, and when it's going in your favor, it feels great. But when it's not going in your favor, it can hurt a lot. So all of those, how to tackle the minuses, all of that is also covered. In general, when you talk of weekly options, they are generally not technical or pattern based, because they're based on the mathematics of the options. Your delta, gamma, and mostly theta. These are the three Greeks that really start going crazy. And your most strategies are based upon the mathematical behavior of these Greeks. However, having said that, there is one technical indicator that is very important, and I found it to be the most helpful in terms of structuring your weekly option trade. It provides the right framework to approach all weekly option trades. And so that indicator is also covered in detail in the product. It's not a complex indicator. However, it gives you a mental frame of mind for your trade. Whether you're dealing with long options, whether you're dealing with credit spreads or iron condors, this one particular indicator is very helpful in terms of thinking through what might happen to your trade, what can you expect to happen to your trade on a daily basis or 2-day basis or 3-day basis. So that indicator is very helpful. We do cover all kinds of trades: long calls, puts, debit spreads, credit spreads, iron condors, calendars, double calendars, diagonals, double diagonals. I'm in the process of testing a straddle strangle strategy. It's mostly a strangle strategy, which is looking good. Should be the testing process should be over in about 2 or 3 weeks, and so that will get added to the product also when it's ready. With all option strategies, you have to think of risk management, and especially for weekly options, there's a particular way to look at it. So there are three key parameters to look for whenever you deal with weekly options, and you always view weekly option trades through these three parameters. So this will help you to structure your trade properly before you actually put the trade on. Striking the right balance between time decay and price movement. This is, I believe, one of the most critical factors when we are dealing with weekly options. And what I mean by that is, on a daily basis, time decay is rampant. And on a daily basis, you can get pretty big price movements. So whether you're long the option or whether you're short, so which means when you're long the option, you want a big move in your favor. And when you're short the options, you don't want a big move in your favor. So you have to strike the right balance between time decay and price movement, and this is a consideration that all weekly option trades have. Now, unfortunately, I can tell you that many people don't even think about weekly options in this angle, and that's why I get, I'll tell you, on a weekly basis, I get at least 10 or 20 emails with people, existing customers or new customers. They send emails with their trade parameters, and they don't have a clue why this, or why it happened in such a way, and why they were not able to adjust, because they did not understand the right balance between time decay and price movement. So this is one of the critical features of weekly options that everybody needs to know if you're trading weekly options. And then, of course, finally is what are the adjustments, what are the timing of these adjustments. If you're too early, you might be giving up profit, you might be leaving money on the table. If you're too late, then you're too late. With weekly options, you cannot afford to be too late. It's better to be slightly early than slightly late, and that's the nature of weekly options. You don't want to be too late. So how do we time our adjustments? So all these broad parameters are given for all of these strategies. They're all covered in the product. And of course, you'll see live trades as well on many of these strategies, how the trade went through 3 days, 4 days, 5 days, whatever the case might be. Then you'll see these parameters being used there in these trades. So it, like I said, it contains live trades. It contains live trades on long options, iron condors, credit spreads, double calendar, and double diagonal as well. So all of that is part of the product. Now, with this webinar special, we are offering the weekly max product. In fact, all the products on Option Tiger is 30% off until September 30th. So the coupon code is weekly 30 webinar off. You can note this down. If you wanted the weekly options class, this is the link. However, let me just show you the URL as well, and we'll be able to so this is the if you come to the Option Tiger website, you can go into proprietary systems, and you can apply this coupon code to any of these systems. You can also apply it to the the entire course web bundle. So here we are. If you look at it, these are all the products that are 30% off. The entire course web bundle, normally 999, is now 649. Day Trade Max and Swing Trade Max, normally 297 each, now 199. Earnings Max is again a complete playbook of trades for the earnings season, which is also now 199. All of these prices, the Income Max spread system and the Income Max straddle systems, more simpler systems. They show you specific methods on how to deal with spreads and how to deal with straddles, because I found that these are some of the more popular strategies, not just because I tended to trade them, but even generally, I think credit spreads, debit spreads, straddles, and iron condors, some calendars, and all of that. These are, of course, the more popular strategies. So, over the years, what I've done is through trial and error, through trying out different techniques and tactics and all of that. I've come up with specific intellectual property around each of these strategies. So if you want to put a debit spread trade, for example, okay, you put a debit spread trade. Now, how do you how do you tweak the trade so that you give yourself the maximum opportunities for profit, and create some kind of a weekly income or a monthly income, whatever the case might be? How do you do that? And so all of these That's how this is all focused. All of these products have some specific intellectual property around dealing with each of these strategies. So for all of these products, basically you'll use the same coupon code. It's weekly 30 webinar off. So if you come to the here, you would just apply the coupon. You click on these courses, you apply the coupon, code. It should automatically give you the 30% off. It will also give you 30% off on the entire courseware bundle. So the entire courseware bundle goes for 999, and this is now available for 649 also. So that's all I had. If you have any questions, if you're looking at a couple of different products, send me an email, info@optiontiger.com, and we can take it from there. But this special is on till the end of the month, September 30th. So you can take care of it. Um, any questions about the products, about the systems, anything else, just send me an email, info@optiontiger.com, if you think of something later. Now, if you do have questions here, please type it into the question box, and let's take it from there. If you have questions, please do. So I'll just take a 1 minute break, get some water to drink, and we'll get to questions. So whatever you have, just please type it in the question box. I'll be right back. All right. Let's see. Been quite looks like a few questions have coming in. Okay. All right. AR says, if I'm new to options, where do you recommend get started with? I would, highly recommend the courseware first. And I'll tell you, this is one of the biggest mistakes people make with options is that they know or they learn a little bit about it, and they feel that that they have the ability to trade options, and it's going to be a very serious trial and error, very expensive trial and error, because you'll end up losing money. I'll tell you, I'm not trying to pick on anyone or anything, because I have done the same thing when I first started. When I first discovered call options and put options, wow, they sounded great, and I went for it. And I'm not ashamed to tell you that I lost quite a bit of money. In fact, there was one trade where I bought the spider options. My first trade on the spider options, I bought, I don't know how many contracts, like 10 or 20 or something like that. And I bought it for what was it, like $3.50, and I kept on buying it. The option price started going down, and it was going against me, and I kept on buying all the way till it came down to 50 cents, and I lost big on that trade. And each day and then when it came into the final 20-25 days, time decay was working big time against it, and I did not give enough importance to that. I did not even sort of recognize that I was losing on time decay. So many days the spider would go up in my direction, but the option wouldn't make money, and I just couldn't understand what was going on. So I'm just giving you one example, but I can tell you people make a lot of mistakes like this. So I would say, you start with the courseware, because really with options you don't want to be penny wise and pound foolish. And and that's, I find this happening so much, including myself. So I would say focus on the education, give yourself 3 to 4 months, go through the complete courseware, then you do some paper trading, trade different strategies. Most important, understand why the trade is not going in your favor. What did you do, and how you can adjust it. So I would say start with the courseware bundle, and then of course you can always send me an email, and I can guide you from there onwards. For a beginner, do you suggest a swing trade or day trade? Paul, definitely swing trading. Okay, so day trading is pretty intense. If you have the time, day trading can be exciting. I won't say no, but it's pretty intense. You wait for moves. They happen. If they don't happen, you have to be quick. You have to be nimble. So just from that angle, I would say swing trading is better. And with the swing trade max, what we look at generally is about a trade that could last anywhere from a week to maybe about 3 weeks or 4 weeks. So, you have enough time. You have enough time. You're taking the trade, first of all, based on some, analysis. And that's what the product is all about. You're taking the trade based on that analysis. So you're starting the trade with, giving yourself an edge over the market maker, over the general market, because you're coming in with with an approach. Then on top of that, if things go against you, if things still go against you, because it can happen, markets being what they are, it can happen. If things still go against you, then you have your risk management tactics. You have your risk management, your adjustment techniques, your risk management tactics. You could, you have to deploy them. That's it. So it's much more simpler to get into swing trading rather than day trading. Without naming names, have you compared your strategies with other products, and how have you stacked up? No, Ron, I don't do that. It's I'm not in the game of stacking up with other products. I teach methods. I teach what I have learned. I have learned options the hard way. I've lost a lot of money in the first 1 or 2 weeks, and so the and all my learnings are captured in my products. You will find that I will show you all the pitfalls. I will show you every pitfall there is with any of these strategies, any of these things. At the end of the day, this part is very, very important. At the end of the day, no system can guarantee you that you will make money with it. Okay, because what is required for all systems is that you be an expert options trader. That is something no system can teach you. When do you turn a debit spread into a credit spread? When is the stock reversing? When do you need to make adjustments? How do you adjust? What delta will you adjust? These are things that nobody can teach you. You have to be, it just goes to becoming a very good options trader. What my systems do is give you approach methods. So if you're going to do iron condors, if you adopt the condor max system, you at least have a systematic approach to follow. You cannot put rules for everything, for every twist and turn in the market. You cannot put rules. Options don't work that way. They're not complete black box systems. You do have to have your individual personal intervention. And so that is very critical with options, because a lot of the stuff will be dependent on how good of an options trader you are. Regardless of what kind of system you use, a lot of it will come down to how good of an options trader you are. What is very important in this process is for you to understand what the pitfalls are. So if you're taking a certain approach, is this a good approach or not? So that's the kind of stuff. If the trade is going against you in a certain way, what are the things that you can do? What are the different options you can do? That is what I teach. These are not rule based systems, but they're more approaches. Okay. Yep, sure, Ron. All right. How are weeklies identified within the IB platform? I see it clearly on the Thinkorswim. Yes, Gene. Weeklies on the IB platform. I know the IB platform. You have to go and display it by date. Okay. So you should see the dates And IB doesn't have, IB actually has the exact date of expiry. So it might say September 28th, it might say October 3rd. So you have to go into your display screens and say you want to display options from these dates. So it's a little bit of a pain, I would say. I agree with you. On Thinkorswim, it's very clear. On IB, that aspect is not very clear. You have to go and select the dates of these options. And the other thing that really pisses me off with IB is that you have to also go and select the strike prices that you want to see. Of course, you can select all, but who wants all? I mean, you don't want to populate your screen with 200 different strike prices. You want maybe the top 10 or 20. However, there's not a way to, as far as I know, there's not a way to just say, okay, I want to see the top 10 strikes from at the money. You have to actually physically go and select those strike prices, which I find to be a big problem. All right. Joe says, hi, sorry, Harry, just to let to everyone know your products are great. Looking forward to additional courses. Yeah, thanks, Joe. Joe's a customer for many, many products. That's his comment there. That's much appreciated. Thank you, Joe. With swing trades, are there credit trades or just long? Paul, good question. With swing trades, we always start off with just longs. Okay, so it's either long calls or long puts. And if it goes against us, then we will adjust and make it a spread. So let's say, it goes against us. We'll first make it a debit spread because, it reduces the risk further. And if it goes further against you, then at least the short portion of that debit spread will be profitable. So at some point, when the trend changes, we would want to close out the short portion and let the long call or long put run again. So the first adjustment would be a debit spread. And then if it still goes against you and shows no sign of turning around, then we turn it into a credit spread. But those are adjustments. That is not the base trade. The base trade will always be a long call or a long put. That's what we start off with. And that goes for the day trade max also. We start off with just simple long calls and long puts. So first of all, our risk is contained because, your risk is just what you pay for those options. But if it goes against us, then we will do these adjustments. First, it's a debit spread, and then it's a credit spread. All right. Yep. Thank you, Ron. Hope that answered your question. All right. Does the courses? No. Okay. AR, what you're seeing, the day trade max and the swing trade max and all of that, these are proprietary products. So let me explain that. If you come to the Option Tiger website, what you'll see is, you have bundles also. If you're a beginner, you can do the beginner bundle. If you have the intermediate, you can do intermediate and options advanced. So you have bundles. So if you come here, the entire courseware has everything. It's got 47 courses. Each course is 1 to 1.5 hours long. They're all videos. They're all, a practical approach to options trading. The first 2 or 3 courses are on macroeconomics and basic, financial markets. It's not basic. It's a pretty advanced introduction to financial markets in general. And then from here, introduction to call options. From there onwards, everything else is all options related. There are 47 courses in total, over 100 hours of video on this thing. So those are, that's options education. Then what you have is these proprietary systems. So the proprietary systems are specific approaches to either certain strategies or to certain trading approaches like day trading or swing trading. But here we have WeeklyMAX is what we've been talking about in this webinar. The day trade max is a signal based system. It's a chart based system which lets us take trades on an intraday basis. So which means most of the time, 80-90% of the time, we are closing out the trade on the same day. And so what is the basis for that? How do we, why do we take the trade? So it contains some unique customization of indicators. which give you the best signals and the most high probability trade entries. So that's a signal based system. The Condor Max is the iron condor system. So if you trade iron condors, which are actually one of the most popular strategies, but it is an advanced strategy, you'll realize that the iron condor also, while it has a great number of plus points, it also has negatives. And how do you tackle those? What is the approach you take for if you want to trade iron condors for a consistent income? Sometimes it may be on each trade might be 5%. Sometimes it could be more. And if it's going against you, how do you deal with it? What is the approach you take? Rather than experiment with these trades, I'm giving you a very specific approach to all of these strategies. So, if you trade straddles, then the income max straddles will be good. If you trade debit spreads or credit spreads, the spreads class will be good. The swing trade max, again, is a chart based system. It's a pattern based. And we take trades, we get signals for trades that last anywhere from a week to about 3 weeks, maybe 4 weeks. So, how do we manage those? Earnings max is a specific playbook of trades for earnings reports. So, as we know, every stock reports 4 times a year. So, then what we do is, what are the kinds of trades that are good for earnings? Because we know implied volatility expands. We know that some big move is coming. How do we take advantage of this? What are the kinds of trades we put? And most critically, when do we enter these trades? Because again, it's there the trade-off is between theta and vega, because you're matching off time decay against the rise in implied volatility. So those are the critical aspects in the earnings period, and so that entire detail is covered in that product. All right. So are they all include? No, the entire courseware is just courseware. If you add new courses in the future, will you give access to them? If so, no, the courseware is separate. AR, the courseware is separate. The systems are separate. But for you, since you were looking, your earlier question was about beginner trading. I would say the courseware bundle. Don't look at any of these right now. You're not ready for any of these. What you need to do is focus on education, which will take you, I would say, a good 3 to 4 months. So don't speed that up. Don't be in a hurry. If you want to approach options for the long term, I would say take a patient approach. Take an approach that that you want to learn it. And I can tell you, this is the biggest mistake people make. I have myself made that same mistake. So I always try to point out the biggest pitfall. And the biggest pitfall in options is when you start. When you start, you don't want to lose money, or at least you want to keep it to a minimum. I'll be honest with you, because in all probability you will go down initially. Okay, so but however, hopefully, if you're following what I'm saying, is don't take options lightly. They are complex instruments. There is a learning curve, so don't take that learning curve lightly. Go through the learning process. I can tell you one thing: for 649, you're getting these 47 courses at 15. Basically, that comes to $15 a course. I can easily tell you this is the best education you can find. Forget the value. The value is unbeatable. And even this is the best options education you can find in the market. All right. Ron says, do you recommend a particular options broker? Which broker do you use? Okay, good question. I use Thinkorswim, and I use it because I find the risk analysis in Thinkorswim is the best. Okay. I find the risk analysis is very good. And unfortunately, I don't have my Thinkorswim open now. I should have opened it for the webinar. But the ability to look at a trade visually is very critical for me. And I think if you're trading options, that is a critical consideration. However, Thinkorswim has its negatives also, and I can tell you two of its negatives. One is it is not as easy to for trade management. So let's say trade is going against you. You want to adjust it. You want to add on something. You have to go through 3 or 4 steps. Whereas on interactive brokers, on IB, change your trade management and the execution engine is fantastic. Okay, it is fantastic. It is much better than Thinkorswim. However, Thinkorswim has the advantage of the risk graph, and for me personally, I find that risk graphs are critical for me. and because I use some of these more complex strategies, the Condor Max and things like that. And so I use Thinkorswim but I do have an account on IB also. And if there are simple long call long put trades where there's not much of analysis required, then I use Interactive Brokers. Those are the two platforms I know very well. The third platform I know is Trade Monster. And again, Trade Monster is a great platform. It's a good engine, but their risk analysis is not great. And so I discontinued Trade Monster. So those are the three platforms that I've used, in my opinion. And Thinkorswim also is more expensive in terms of commissions. Now, commissions are an important part of options trading. So if you're new to options trading, you want to look at commissions properly, because unlike stocks where you have a flat rate for say 1,000 shares or 5,000 shares, in options you don't. You pay on a per contract basis. So it's important that you consider commissions. Once again, when it comes to IB, Interactive Brokers, they win hands down in commissions. Fantastic commissions, fantastic execution engine, but unfortunately, not very good risk analysis, not very good visual, tools. And like I said earlier, they have a couple of irritating features where you have to select which strike prices you want to see and which you don't want to see, which dates of expiry you want to see. All of that is a little irritating because you have to constantly do that on a daily basis. And I really don't like that. All right. Okay, what is the discount code again? Wayne. All right, let me show that. It is weekly 30. Let me just type it in here so you can see it. Weekly 30 webinar off. All right. Yeah, so that's the one. Just note it down. If you forget it, just send me an email and we'll take it from there. Yeah, AR, thanks. Yeah, all right, good. Glad you understood it now. Hi, would like to try the swing trader if possible before the day trader max if possible before subscribing. Not sure I understood the question, John. If you could just elaborate that once more, I'll come back to you. I would like to try the swing trade and day trader max if possible before subscribing. Okay, are you talking about the subscriptions perhaps? If you're talking about the subscriptions, I don't have a trial. Yeah, you can try it for 1 month if you see if you like it. Unfortunately, there is no trial because we discuss the product details, the signals, and all of that in those trading rooms. So I can't offer a free trial there, but you can try it for 1 month. If you like it, you can continue. If not, that's fine. All right. In Singapore, charges $2.50 per trade. Vimla says Singapore toss charges us $2.50 per trade. How many contracts? How many contracts, Vimla, for $2.50? One contract. Oh my God, that's a lot. Vimla, you should negotiate with them. Okay. One thing, let me tell you, folks, with these brokers, they are all up for negotiations. Okay, and if you don't, one standard negotiating tactic, one of the better companies with commissions is this company called Trade King. All right, so Trade King. I'm just going to type it here. Trade King, and Trade King charges, um, I believe, either 495 per trade and I believe like 70 cents a contract. Okay, so you can always talk to Thinkorswim or anyone else. See, Interactive Brokers, you'll get the best price. There's no question. But if you're dealing with other brokers like Thinkorswim or Charles Schwab or any of those, you can tell them to match Trade King charges. Because Trade King is actually one of the lower ones. I think this may even be a little less, 60 cents a contract. But so if you trade 10 contracts, for example, on a trade, you'll be paying 495 plus 10 into 70, so that's $7. So 7 plus 495 is about $12. Although that will seem a little expensive, but that is I mean, unfortunately, options trading involves quite a bit of commissions. But you'll see that for 10 contracts, if your average price comes to about $1 per contract or less, I would say the I would say that it's okay. All right. Now the other thing is, if you have a high dollar value account, so I mean 300,000, not even 300,000. I think that you need about 400 to 500,000. If you have a large account like that, then even think or swim will come down pretty much at a very low level. So think or swim will come down. They'll first of all knock off. See, think or swim now charges, um, toss charges are I believe 995 plus plus anywhere from 75 cents to $1.50 per contract. Okay, so that that can add up. And that can become a little expensive, especially after Thinkorswim got acquired by TD Ameritrade. They've become a little more corporate now, and all of TD Ameritrade's cost structures and pricing structures have all affected Thinkorswim. So Thinkorswim is not cheap anymore by any standards. However, if you do have a $500,000 account, you can get it knocked off to no trade fee, first of all. So no trade fee of 999, and you can get each contract at I would say 75 cents. So that becomes very attractive when you don't have this trade fee and each contract is 75 cents. But unfortunately for that, you have to have a $500,000 account, which many people will find it difficult. But just to let you know, if you do have an account like that, then that would be the way to go. Lightspeed, John says, is $60 flat per contract. That is very good, very good. Okay, TradeStation. I'm getting a little more information here. TradeStation. TradeStation is one platform I've been wanting to try. I haven't tried. I really love TradeStation's charts, but I'm not sure how the platform is for options. I believe it's called Option Station, and I do want to try that at some point. But okay, this is good information. Light speed is zero point 0.6. John says flat per contract. Light speed trading, I believe, is a more specialized kind of a kind of a trading platform. But if somebody uses then execute on light speed, I got it. That's a good strategy, John. He uses toss for charting and analysis. Yep. Then execute on light speed at 60 cents. Yeah, okay, that's not a bad strategy at all. The TradeStation, Paul says, is low options trade pricing. Okay, Paul, if you know how much it is. Did you lose the sound? Did you lose it? Did it? Can you hear me? Ron says we lost the sound. Can you hear me? If you can hear me, let me know. Yes, yes, yes. No, no, I can hear you. All right, Joe. Yes, yes, yes. Okay. Ron, it's probably you. Let me just type in. Ron, must be something at your end. Others can hear. Okay, Ron says you can hear. All right, that's good. Okay, yeah. So basically, where were we? Yeah, TradeStation is one thing that we can you can look at. Lightspeed is good. I found using the Lightspeed platform a little difficult, John. I went through their demo. In fact, their rep was with me, and he showed me how to use the platform and things like that. I found their platform a little complex to use than that. All right, a member in another trading room. Okay, maybe yeah. Okay, and then possible. All right, yeah, sounds good. Sounds good. Okay. All right. Okay. So, John, just send me an email, and let's talk about it separately. Have you used the Doe platform? I haven't used the Doe platform. I know about it. Doe is in general, it is, I believe it's run by Tom Sosnoff, who is, of course, was the founder of Thinkorswim, sold it to TD Ameritrade. He's also the founder of Tasty Trade. Great guys, fantastic options traders, obviously. And, I haven't personally tried the Doe platform, but I have seen quite a bit of the Tasty Trade material. All great stuff, good guys, no question. All right. Okay, that's great. All right. Any other questions? That's great, folks. All very good questions, good discussions. Appreciate you coming on a Sunday evening. I believe if you were watching the Sunday football game, not sure what happened to the Denver game. I was busy with the webinar. It had gone into overtime, so not sure who won. We'll have to see. All right. Okay, folks, have a great week. Futures now are down about 275 on the S&P. So there must be some negativity somewhere. Oh, Denver lost. Oh, no. Oh, no. Okay. All right. Okay. All right. Thanks, Wayne. All right. So have a great week, folks, and happy trading, safe trading. If you have any questions on the presentation or any of the products, just send me an email, info@optiontiger.com. We'll take it from there. All right. Great having you. Have a great night. Bye bye.